is we have this particular push of price to the upside, swept this buy side liquidity. Now we have the return of price to the downside. You can see we have this fair value gap here. Now you can see this bearish momentum can be pushed to the downside and then closed below the fair value gap. Now you can also see the next candle is actually a bearish candle, and this actually even returned to the upside, mitigated the fair value gap, and then closed below the consequent encroachment of the fair value gap, and even closed below the entire zone of the fair value gap. So now what actually the expectation is to see that price possibly react at this fair value gap, and then we see the push of price to the upside. But now what you can see is that now price give us a momentum movement to the downside, and then price. Hello traders, welcome to the Nexoel Trading Hub YouTube channel. In this video, we are going to be looking at a technical trading concept in the market. It is actually a trading concept I've observed in the chart after several series of backtesting price delivery in the charts, but didn't really establish that as a criterion in my trading system until I discovered that Michael Huddleston taught that in the ICT mentorship. And this concept is what ICT calls the inversion fair value gap. So guys, let's head to the charts so you can understand how to utilize the inversion fair value gap into your trading system, because the inversion fair value gap helps to serve as support or resistance to price depending on the market's condition. So guys, what we can see here from the chart is our conventional fair value gap, where we have series of 3 momentum candles to the downside, because what you can see here is actually a bearish market condition. So from this candle's weak low point to this candle's weak high points, so you can see we have this particular imbalance in price, because you can see that this candle's weak did not return to the upside to mitigate the low of this candle's weak, neither mitigate the close of this candle. Then we can see we have a very sharp movement of price to the downside. So this is what we call inefficiency in the market. This is what we call price imbalance, or what you call now the fair value gap based on the ICT concept. So now we have series of 3 candles. The candle's weak low point of the first candle and then the candle's weak high point of the third candle is actually what gives us the fair value gap in relation to the momentum that occurs in the second candle. So this is actually now the bearish market condition. Now you can see for the bullish market condition, we have this series of 3 momentum candles to the upside. So you can see that the candles weak high points of this first candle and then the candle weak low points of this particular candle is what actually we would consider to establish the fair value gap between this series of 3 momentum candles to the upside. So now you can see for the first candle, to determine the fair value gap, what you're going to do is to actually consider the weak high, and then for the third candle, you consider the weak low. You can see this particular inefficiency is what we now call the fair value gap, because it is expected that before we have further push of price to the upside, this candle's weak is supposed to actually mitigate either the candle high point or mitigate the close of this candle before we can see further push of price to the upside. But no, price only return to this level and then we can see the momentum to the upside. So we have this level as the fair value gap. So this is the concept based on the conventional fair value gap. So now we're going to look at how to actually identify the inversion fair value gap and also what to expect in an inversion fair value gap zone. So now guys, in this particular chart example, you're going to see that we have this bearish movement to the downside. So our expectation is to see the return of price to come mitigate, fill up this fair value gap, and then we can see the continuation of price falling to the downside. Because what you can see is this is where we have the bearish momentum movements to the downside, and then you can see this is where we have the fair value gap. From this candle's weak low points to this candle's weak high points here. So this is where we actually have the fair value gap. So we expect to see price return to the fair value gap, fill up the fair value gap, and then we see the fall of price to the downside. But what you're going to see is that price broke through this fair value gap and then close above the fair value gap. You can also see that price actually now also closed above the consequent encroachment of this particular fair value gap, and then also closed above the entire zone where we have the fair value gap. And then you can now see the further push of price to the upside. So now, since this particular fair value gap has been breached, our expectation is now we want to see the return of price, but this fair value gap to reclaim price before further push of price to the upside. So this is now where we establish the inversion fair value gap, because what you can see here, we actually have a bearish fair value gap. The expectation is to see the return of price to mitigate and close to below the consequent encroachment of the fair value gap, and then we see the fall of price to the downside. But then price closed above the consequent encroachment, and also price closed above the entire zone of the fair value gap, and then we further see bullish candle to the upside. Now you can see that price returned to the fair value gap that was violated. And you can also see we have another confluence of a fair value gap here. So you can now see that price returned into this fair value gap that was supposed to reclaim price and further send price to the downside. So price returned to it, mitigates the fair value gap, and then closed above the fair value gap. So you can see price closed above the zone of the fair value gap, above also the consequent encroachment of the fair value gap. And then you can now see the continuation of price to the upside. So that is why I actually stated earlier that the inversion fair value gap helps to serve as support or resistance depending on the market condition. So you can see actually this fair value gap was supposed to serve as a resistance level for us to actually have further push of price to the downside. But then price actually violated this particular fair value gap, filled up the fair value gap, closed above the fair value gap. Now the fair value gap becomes an inversion fair value gap, with the expectation to see that price return to it, retest it as a support level, as a support zone, and then we see the push of price further to the upside. So here in the bullish condition, you can see we have the momentum of price to the upside, and then you can see we have our fair value gap here, where the expectation is to see the return of price to the fair value gap, for price to mitigate the fair value gap and then close above the consequent encroachment of the fair value gap, and then we see the continuation of price to the upside. What you can see is that we have the fall of price to the downside, and then price closed below the fair value gap. So our expectation now is to see the return of price to the fair value gap that was violated. So the violated fair value gap becomes an inversion fair value gap. So we're expecting to see it reclaim price as a resistance level and then further push price to the downside. So this is actually the concept of the inversion fair value gap, which is actually different from the conventional fair value gap that we all know. So we are going to look at real-time chart example to see how the inversion fair value gap plays out, and also how you can utilize that in your trade execution. So guys, let's head to the real-time chart examples. So guys, now let's head to the chart to look at how to identify this inversion fair value gaps. I've already marked out the inversion fair value gaps on my charts. So what I'm going to do is to actually show you guys how to identify them and how to utilize them for trade execution. The best you can do to yourself to actually understand how to apply the inversion fair value gap to your trading system is actually for you to back test your charts to see how these things play out, so that you can have a solid understanding of the inversion fair value gap and how to use them to execute your trade. So what you can see here, we have the push of price to the upside. Price created this high. You can see we have the return. This should be a discount level. This return should be a discount level. Now price returned to the fair value gap. You can see price reacted at the consequent encroachment of this particular fair value gap. Then you can see we have the push of price to the upside. But then further, you can see we have the return, and then price reacted at the fair value gap again. Now you would see that price did not close below the fair value gap, and then we have the next candle closing above the consequent encroachment of the fair value gap, and then we have the next movement of price to the upside. Now, what you can see here is we have this particular push of price to the upside swept this buy side liquidity. Now we have the return of price to the downside. You can see we have this fair value gap here. Now you can see this bearish momentum can be pushed to the downside and then closed below the fair value gap. Now you can also see the next candle is actually a bearish candle, and this actually even returned to the upside, mitigated the fair value gap, and then closed below the consequent encroachment of the fair value gap, and even closed below the entire zone of the fair value gap. So now what actually the expectation is to see that price possibly react at this fair value gap, and there we see the push of price to the upside. But now what you can see is that now price give us a momentum movement to the downside, and then price violated the fair value gap, filled up the fair value gap, and closed below the fair value gap. And then you can see we have a further bearish candle movement, and then this candle opened and then pushed to the upside, but then faced rejection at the fair value gap. So the fair value gap becomes an inversion fair value gap. You can see price gave us this week, and then you can see price closed below the consequent encroachment, and also price closed below the entire zone. And then you can now see for the push of price to the downside, we still have price return to retest it. So you can see that we have this zone to be like a support zone, but then price violated it and then is reacting as a resistance zone. So this is what makes it an inversion fair value gap. Now you can now see we have further push of price to the downside, and then price swept this candle's weak low point, which is actually this swing low that sponsored the move to the upside that took out this buy side liquidity resting here. Now you can now see price return to this particular fair value gap, and then price mitigated it even below the consequent encroachment, but price did not fully closed below the fair value gap. And then we have this return. Now you can see again price return to this fair value gap that is now an inversion fair value gap, mitigated it, and then we have the fall of price to the downside. Now when you're just looking at how to possibly take entry here, your expectation is you possibly want to wait for price to return to this fair value gap resting above here before you actually take an entry. When you see price create this change in market character resting here. So when you see price create this change in market character, your expectation possibly would be you want to see price return and then fill up this fair value gap, and then you see the fall of price to the downside. But then you can see that we have an inversion fair value gap zone, because you can see that this zone has actually been respected by this return. You can see facing several rejections here. Price return mitigates, reacts at the inversion fair value gap, and then you see price falls to the downside. So now you can now see price return again to it, and then we see price for the push to the downside. So you can see that this fair value gap, which is now an inversion fair value gap, reacts as a resistance to price, and then you can see the fall of price to the downside. Now, when price actually violated this fair value gap, price filled up this fair value gap, because you can also see we have a change in market character here. Now you can see price closed below this fair value gap, and then you can now see price return to retest the consequent encroachment of this fair value gap, and then you can see the push of price to the downside. So just the way I've stated earlier, I said that the inversion fair value gap acts as a support or resistance to price depending on the condition in which the market is giving you a reversed movement. So now you can see we have the push of price to the upside, where the fair value gap is reacting as support, but then the fair value gap was violated and then reacted as a resistance. And then you can see we have the continuation of the fall of price to the downside. So our conventional fair value gap is actually here, where you can see we have this momentum push of price to the downside from this candle's weak low points to this candle's weak high points. So we expect to see price return, and then you can see price return price retested the consequent encroachment of this fair value gap. Then you can see we have the close of price below it. We have further push to the downside. Now you can see that price was returning here to the upside. Price gave us this fair value gap. So we expect to see price fills up the fair value gap, and possibly we have a reaction to the upside. What you can see is price filled up this fair value gap, and then we see further momentum to the downside. And see price filled it up. You can also see that this bearish candle gave a return to retest it. So you can see that this fair value gap becomes an inversion fair value gap, because the fair value gap has been violated by the movement to the downside. It has been filled up, and then price closed below the zone of the fair value gap. And then we can see further bearish movement to the downside. So you can now see when we actually experience this movement to the downside from this particular candle, you can see price return, retested the inversion fair value gap, and then we have further push of price to the downside. What you can see later on in the future is that you can see price return to retest the fair value gap, fill up this particular fair value gap that is now our inversion fair value gap. Price filled up the fair value gap, we have this reaction. So you can see the fair value gap becomes an inverted fair value gap, or the inversion fair value gap. So price fell to the downside, and then we can now see push of price to the upside. So what you're going to see is actually we are in a bearish condition here. So this is actually our conventional fair value gap. So this is now, you can see we have this pullback to the upside that created this fair value gap, and now price fell to it, to the downside. You can see price return, retested it, and further push. So the fair value gap here became a resistance for price, an inversion fair value gap, and then we have the fall. Now here also we can see price created this fair value gap from this candle's weak low point to this candle's weak high points, and then price filled up this fair value gap, and then we still see the fall of price to the downside. So what you're now going to see is that price pushed more to the upside, and then we can see that now price actually now broke through this fair value gap. Price retested, price returned again to it, and then broke through the fair value gap. Now what you're going to see is that now you can see price came back and then retested this fair value gap, which is now an inversion fair value gap. And then we have the push of price to the upside. Now we can see that now price returned to this conventional fair value gap here, and then price filled up this conventional fair value gap. Then you can see we have the fall of price to the downside. Here we have this fair value gap. Let me mark that out. We have this fair value gap here. So what you can see is that now price returned to the fair value gap, mitigated the consequent encroachment, and then we see price fell to the downside. So let's extend this to this level. So now what you're going to see that this fair value gap now was violated. Price pushed to the upside. Price pushed to the upside. You can see price closed above the fair value gap. So you can see price was reacting here, giving us a form of a range, because you can also see we have this fair value gap that has now become an inversion fair value gap. Now price, you can see price returned to it. When price mitigated this particular fair value gap, price dropped to the downside after filling up this fair value gap to react at this inversion fair value gap. And then you can see this inversion fair value gap served as a support level and then pushed price to the upside, violating this fair value gap. So this fair value gap now will serve as an inversion fair value gap in the future. So now you can see price broke through it, returned to the downside again. Price, you can see we are having a ranging market condition here. So when price successfully further broke through this level, you can see now price returned to retest it. You can see price closed above the consequent encroachment, and then we have the push of price to the upside. So also in this condition here, price fell to the downside. We have this fair value gap left here. Price return, you can see price return, you can see price closed above this fair value gap here. Return to mitigate this level. But then what you're to expect is, even if you have the possibility of expecting to see price return to retest this and then continue falling to the downside, you should expect the price will face rejection at this fair value gap, because this fair value gap will become an inversion fair value gap to actually serve as support. So you can see now that happened here, price served as support, and now we are seeing that price is pushing to the upside. So this is how you want to identify the inversion fair value gap. This is actually different from the conventional fair value gap. So I believe, guys, you actually found this video resourceful, and then you've learned a new stuff to actually add to your trading system. So guys, if you're new to this YouTube channel and wish to stay updated with coming contents, you can do well to subscribe to this YouTube channel, like and share our video. If there is a complexity in actually comprehending what I just actually made known in this video, you can actually drop a comment in the comment section, and then possibly I would actually come back with another video that simplifies this understanding with possibly a replay of charts so that you can see how these things play out. So cheers, guys, and God bless you all.